Hey, everybody. Welcome to episode 2 of the Lone Wolves podcast. I'm really excited to be back today with my co-host, Mike March. And today we figured we might want to do something a little bit different. We're 3 days removed or 4 days removed from Silicon Valley Bank collapse, something obviously very, very unique and interesting. So I figured that might be an interesting topic to discuss. So I'd like to get right in. And Mike, you and I haven't had a chance to even talk about this. So what are your thoughts? Pretty crazy past few days, huh?
Well, to me, I started hearing about it Friday morning and it escalated so quickly. And, as far as the tech industry goes, they were heavily leveraged against that bank, more than I would have ever expected. And people were worried about making payroll, and a lot of founders and just startups in general were really in limbo for a good 3-4 days there. And we can get more into the specifics, of how things unfolded. But to me, it was pretty shocking. I was pretty riveted by it. I think I texted you Saturday about it. I clearly know a lot about financial institutions, but I don't exactly know about just the way that they leverage their assets and how deposits and loans and treasury bonds and all that kind of come together. To me, some people I know, a lot of people I read about, were just affected by it and scared.
Yeah, I mean, we have numerous relationships that we know that own businesses in the tech industry and were impacted by them. So definitely interesting. It was certainly a scary couple of days for any individual that was banking with SVB, especially if they were the only bank relationship that they had and they didn't have any redundancy or any alternative. So they had it was just announced that there was I guess they don't want to call it a bailout, but it was certainly a bailout for Silicon Valley Bank and Signature Bank. What are your thoughts on the bailout aspect of it?
So, for me, I think the bailout was a good thing. And I know you could kind of go both ways, and maybe you could probably convince me the other way. But at first glance, I think the bailout is a good thing, a lot, because one sector was really heavily reliant on this, and that sector is one of the things that gives America and its GDP some gravitas. I mean, when you look at that Silicon Valley and the tech industry and just the companies that come out of here, it really is something the rest of the world wants to see. It's something that they look towards us for, and it really brings an influx of not just American talent, but worldwide talent here. The fact that we have this just startup Silicon Valley ecosystem is something that it's like a magnet of world-class talent coming to the U.S. And it could be delicate. Other companies would love to take that over. They'd love to see that go down, right? And I think protecting that and keeping that ecosystem there is important. And while it probably would just go forward, I'd rather not mess with it. And I do think faith in the banking system, at least the way we're currently running things, keeping that faith is important, at least for the current status quo.
I definitely agree with that. Obviously the fear was there was going to be contagion and
Yep.
bank runs at every smaller regional bank. And obviously that would be incredibly impactful to the economy in general. So you can certainly see why they wanted to do this, why they want, but you could also see on the flip side when the American public, continues to feel that, these banks, the American public doesn't share in the profits, right? These banks, they're doing well. It's their profits, right? But as soon as it's their losses, well, now it's time to share the wealth with the American public and, being bailed out by their tax dollars. So, to your point, I could certainly see both ways, obviously from a contagion aspect, it's a real concern if you're going to start having more and more bank runs and more people obviously taking their cash to just several of the largest financial institutions. I think regardless of what happens, I think that's what's happening, right? We spoke with many people that were with SVB and they are now have accounts opened up with some of the largest banks, in the country and even in the world. So I definitely think you're going to start seeing more and more concentration, even if it's just to have a backup at a larger bank.
Yeah, and you keep mentioning larger banks, and we obviously have great relationships with some of those banks, but also the regional banks we deal with a lot too. And I'd hate to see some of them lose faith. I'd hate to see some of them be overregulated. They're an important part, an important cog in the system as it's built now. I'm not saying there shouldn't be changes coming, but the way things are functioning now, you want to keep that regional bank strength going too.
Agreed. That's a great point. And obviously, you came from. I mean, they have to be a top 15 bank in the U.S., top 20 bank in the U.S. with HSBC.
Probably
but,
not in the U.S. anymore.
You don't think, but international. I mean, they have to be a top 10, right?
I would be shocked if they're not higher than that. I'm not. It's been it's been a few years since I've worked there, but I'll always be an HSBC guy at heart. I mean, they hired me out of college, they got me started, and yes, they are a huge bank. They gave me so many opportunities. It's amazing how many people banks like that just employ. You're talking that bank at one point had like 270,000 people when I worked there. It's
Oh, is that
it? Yes, that's it. They're just a small country, basically. But I will say, yeah, it is fascinating. I mean, to me, I think the most fascinating thing about it is how a few influential people basically started a scare that took down what I would consider to be a very influential large commercial bank. Like they're not high on branches, but they were high on deposits, and they were high on just the influential customers they deal with. And it really did take a few VCs getting scared based on, and I don't know if you want to do a rundown or anything like that.
I mean, it was definitely high risk as well, though, right? So they were high on those other things, but they were certainly high on risk and maybe really didn't take into consideration what other banks were recognizing was going to happen in the environment, right? You knew the interest rates were going to be going up,
yep.
And you knew there was certainly the potential for an impact, and they were more concerned about maximizing their return over just making sure that they're doing it responsibly, for sure.
That's true. I mean, maybe that's a good segue into talking about managing risk and kind of how you watch. And this is what you speak of it all the time. So this is really a segue of me trying to get you to tell me how managing risk is important.
It is interesting to think about, right? Because from a business perspective, whether we're consulting with our clients or for ourselves, if we're looking at a vendor, a third party service provider, it's due diligence is incredibly important. We're very, very thorough with our due diligence process, and I think most businesses are like that. Most businesses need to be very, very thorough with that process. They recognize the risk that there is if they're not. But I don't know if people do that with banks. I think people have blind faith that the banking system is sound and solid, and something like this isn't going to happen. And obviously, it takes an incident like this to remind everybody that that's not the case. And even for your bank relationship, one, you should have redundancy and have a backup bank. But two, maybe there's a little bit of due diligence involved as well, and to just even taking a quick having your CPA or a member of your accounting team just look at the financials of the bank, and to look at some of the specific ratios just to see how healthy that bank is. Are they over leveraged?
Is that publicly available?
It's publicly available.
So why wouldn't you do your due diligence there, especially if you're especially if you're a company with the resources?
Yeah, most aren't going to know what to look for, though, right?
I certainly would not.
If you don't have a financial background, you're not comfortable with looking at financial statements. I believe I heard that even within the financials, the loss that triggered this did not actually have to be reported on the actual financials itself. And it was just in a footnote on, maybe page, I don't know the exact page, but let's say page 79 had a small little footnote just letting the world know about this loss, right? This mark to market loss, I believe it was.
I was on the
And
didn't they ask, weren't they going to raise capital, a few billion to
they were
make up for
definitely
that
looking
loss?
to cut because of that. Yeah,
Yeah, okay.
yeah. So I mean, there's a few things with it, but revolving around that loss. Because I mean, what it sounds like, and again, we're only a few days out here, so a lot of things could be coming to light that we're not aware of right now at the time of recording this. But it definitely seems like they were not understanding how difficult their client base would have, difficult time they were going to have of actually raising new capital. So I think based on the increase in interest rates, they were struggling to raise capital, and based on that, they were utilizing the cash within that bank at a higher rate than that bank ever experienced in the past. So the bank assumed that the rate of the cash usage would be in line with what it historically was, and as that started to accelerate, they started to have to cash in their long-term treasuries, and they were having to take a loss on those, and that's where it all started. But again, I'm sure we're going to be finding out a lot more over the next few days, but that's what it appears to be right now.
So do you think this is going to have any long-term effects on the lending industry, both from a fintech perspective and a big bank perspective?
I mean, from a fintech perspective, it's going to be interesting. Obviously, with the bailout, they're being made whole, so it's not going to be the worry of their ability to make payroll based on this, right? But I do think overall the industry in itself is going to have some difficulty. I think there are a lot of big players in the fintech space that had zero bank redundancy. This was their bank, and it wasn't just for their bank account, but even to provide services to their customers. You were hearing about Stripe and PayPal and Square and a lot of other huge players in the fintech space where their customers' funds were being held and they were being held hostage. They couldn't get them out of the bank. Um, I do feel like there's going to be people losing faith in some of these alternative banking products in industry for sure. But then again, they're probably going to be losing faith in the traditional banking as well. So yeah, that's a tough one. I'm not sure. What are your thoughts?
Yeah, I mean, I think with stuff like this that, from, I guess you wouldn't say rubble, right? But someone usually rises out and makes the most of it. I kind of think, at least from a startup perspective, I think the startup community certainly shook by it. I think it's an opportunity for some of these fintechs to maybe start lending and leveraging more of that space than they are now. Because clearly there was just a few big players that were doing most of that in the VC world.
Yeah, I mean, even for ourselves internally, for Valmer Merchant Services, we, as soon as that happened, we had an influx of people going to our website, filling out forms to speak to people, just calling us, reaching out to speak about. One, they were definitely looking for redundancy and a secondary solution for the processing. But two, I mean, we had dozens of different companies reach out where their funds were actually being held by some of those large players. So yeah, I mean, there's it definitely created opportunities for some of the smaller to mid-sized players within their respected industries for sure. And I think a lot of people, they did a nice job trying to get their money out early enough and making the pivots. But again, it's incredibly stressful as a business if you don't have that secondary bank account, because the question is, there's these companies were trying to pull the funds out. Well, where does it go? I was hearing people saying that people were getting massive cashier checks because they didn't have a secondary bank account just to perform a transfer to. Um, so I think that overall is going to be a massive, massive change. Everybody that we speak to and we know of, together, just with texting back and forth, They all have new bank accounts. They all have secondary bank accounts.
So that seems crazy to me, and maybe it's just something we've always done, but we've always had two banks. Like, why would you not have more than one bank? It doesn't really cost you much to open up a second account. The banks are willing to have you, especially if you have a successful business and that type of stuff. Like, even if you're prominent, I mean, just having that secondary account seems like a no brainer. Like, why do companies do they just not think of it? They're just happy with their current bank relationship. They don't want to have a second one. Like, for what reason would you do that?
Yeah, I mean, I think some don't even think of it, or they feel comfortable with just having the relationship with the current bank that they have, and they think one is enough. I'll say from this Lone Wolves podcast, right, from a lending angle, there's traditional lower risk lenders, but a lender that has a high interest rate or a tribal lender. There's not a lot of banks that will bank with them, right? So that's really really difficult. From our standpoint, we have, again, back to Valmar Merchant Services, we have multiple banks for redundancy for ourselves, and not just from a checking account standpoint, but to actually facilitate the settlements of the payments, for each and every one of our merchants. And again, the redundancy is incredibly important on that end. But there's many merchants that do struggle to find one bank account, let alone two. Our banks are certainly open to our merchants opening up a depository account, but yeah, I mean, a lot of them are struggling to find secondary ones as well. So I can imagine that being a part of it. And I'm not sure if the Bank of Americas of the world are going to be willing to bank with some of those higher risk ones. So that could be a reason too, for sure.
Yeah, I mean, high risk is that we're going to probably do an entire episode on that one of these days anyway, right? I mean, we know the field, and that's one of the big selling points is we give you that redundancy to continue processing. You don't have to be stuck. You shouldn't be stuck at one bank, especially if you're high risk. Um, but yeah, I guess for the average business, I just assume that they have a secondary account because you just never. But you know me, I am constantly talking about backups. No matter what it is, I have to have a fail safe. If we're designing something, I have a backup here, and I have a backup on it. If I have a backup on AWS, I'd probably have that same backup over on Google Cloud, right? Because if something happens, someone doesn't pay a bill over there or something, and that's gone, I cannot not have my data, right? Or we run a container service. You have more than one pod sitting out there in case one goes down. There's always another one to go there. So I guess in my mind, I'm just always thinking redundancy at all times.
But again, though, I think many business owners would think of redundancy from that perspective, and to make sure. I know for a fact there's plenty that don't. I was in public accounting for years, and I had plenty of clients that wouldn't even consider that. But I had plenty of very large clients that, yeah, redundancy was very very important to them. But yeah, I don't know how many people would think that they need to have that secondary bank account. Again, I think people looked at a bank very very different than a traditional vendor, that they're going to be performing due diligence on. And I don't think that's the case anymore, but I think that was certainly the case.
Yeah, I mean, I could see that you do look at a bank differently than any other. I mean, I guess you just assume that they have all they have regulators. They're watched by the government probably more than any other business out there. I I guess that's true. I guess that's true. And I don't manage the bank relationships, obviously. So that's more your bag than mine. But yeah, I guess if you were going to trust the business just blindly, it probably is going to be a bank.
I would think so. Yeah.
Yeah, even with everything that's gone on, and I mean they kind of have a bad name now.
Yeah. Well, I guess you can feel like you can trust it because, I mean, I have no idea what's going to happen from this fallout, but, FDIC insurance, $250,000. Well, you're telling people with 3 million and 10 million and $20 million in their bank accounts that they're still going to be made whole. So, I don't know what the impact is. Does that mean every bank has to pay FDIC insurance for every single dollar that's in their bank, and not just for up to 250,000. Like, who knows what the outcome is? But I think based on that, people still have some comfort, maybe not in the banking system, but comfort enough that the government will step in and make sure that they're made whole.
Yeah, that's only going to go so far, though. If you had
Agree?
15 banks fail, I don't think they're covering everybody. They did this to stem the tide.
Agreed.
If it was a lot larger, I don't believe. Maybe they would have.
I don't know. We've been printing a lot of money the past couple of years.
We have, but that could be pretty detrimental. I mean, if you're
Well,
over 250,000, you got to have a money manager, and you got to understand where you're putting everything, and you got to understand the risk. Now, raising that's a whole nother podcast too. Raising the 250,000 probably is low. After inflation and everything.
Yeah, agreed. Agreed. Who knows what that amount should be, but
if you had 800 million in there, that's a different story.
Yeah, that's a little higher than anybody would feel comfortable with, I would assume. But again, it's the American public's tax dollars that covered the first 25 billion here, right, out of $100 billion fund.
Are they that short? They're going to liquidate, right?
Between them and Signature, from what I've seen, it was $25 billion. So again, we'll see what happens. But again, if there were additional bank failures, you're going to eat into that 100 billion pretty quickly.
Yes, I didn't realize it was that big a gap. Okay,
it's pretty interesting. Yeah, pretty interesting. So I mean, regardless, the whoever had an account with the bank is made whole, but obviously anybody who invested into the bank, they're out that money.
That's different. Yeah,
they have those losses. That's
very
different.
The stock has obviously just gone to zero at this point. There's no buyer. The government's going to liquidate, from what I understand. I haven't read about.
Yeah, we'll see. We'll see. I guess it's early, but I would assume. Yeah, I would assume that's going to be the case. But okay. So like from again, it is really interesting though when you think about the fact that to your point, from a tech standpoint, I don't know any person in your position or in a tech position that wouldn't be concerned about redundancy, and I think a lot of other businesses are like that. But yeah, it's pretty incredible how this was one area that even massive players that should know better didn't have a backup. This was the one bank that facilitated all of their transactions for whatever it was. And it can be, I mean, some of it is like it's the lifeblood of their business, and it was still one single point of failure. That's terrifying, and I can't believe that an executive at some of these large banks could sleep at night understanding and recognizing that they truly had one single point of failure.
It's crazy.
It is, but a lot of them did a nice job though of very, very quickly transitioning, so that they can continue on. But I mean, it certainly was disruptive to some very, very large players for sure.
Agreed, and to an entire market. I mean, literally the entire VC startup industry was shaking in their boots.
Yeah, they are. Yeah, and I don't know. Anything else on this one, or are we cutting the podcast at about 25 minutes today?
I don't have anything to add. I just think this was a fascinating topic, and
it is fascinating.
One of the things we wanted to do was bring up fascinating topics, and I think we hit one here. Still a lot to unfold. We might talk about this even more.
We might become SVB experts.
I probably will not, but we certainly can talk about it again.
Yeah, no, it's definitely interesting. Again, anything that comes up like this, we'll probably obviously want to have a chat about. And then the game plan is still to have some real value on the next podcast with with some of our expertise, but
There is one other thing that I did want to bring up today, and that is,
But
Rick, what's making you upset today? What's bringing you down? Why is Rick mad today?
you know what? I'll be honest. I'm gonna have one for you next time. Okay. Like I normally can have a nice little rant for you, Mike. But I don't know. This, the sun was shining. It was a good day today. I sound like Mike March right now.
Okay. Well, I'm certainly in a good mood. I'll tell you why I'm happy today. I'm happy that uh, I guess a lot of stockholders missed out, but everybody had their deposits. They didn't just lose their money where they thought it was safe. So I think I was
Agreed.
happy about that.
Agreed. So, okay. Well, this is a wrap of episode 2. We'll be filming episode 3 in a few weeks from now. So definitely very excited. We're going to be talking about robotic process automation. I'm very, very excited about that one. So thanks everybody for listening, and we'll catch you next time. Thanks.